Meta Platforms Incorporated, formerly known as Facebook, stands today as one of the most dominant forces in the global technology and digital advertising landscape. With its ecosystem of applications including Facebook, Instagram, WhatsApp, Messenger, and Threads, the company has entrenched itself deeply into the daily digital lives of billions. In recent years, Meta has also aggressively shifted focus toward artificial intelligence and the Metaverse, diversifying its strategy while reinforcing its ad-driven business model. In the first quarter of 2025, Meta reported revenues of approximately $39.5 billion, which represented a 12% increase compared to the same quarter last year. Net income reached around $11.2 billion, translating to earnings of about $4.79 per share, which was a significant increase of 42% year over year. This earnings growth was driven by strong performance across digital advertising, particularly through Instagram Reels, and better-than-expected cost management. Meta has maintained very healthy profit margins, driven by operational efficiency and improving ad monetization strategies. Despite challenges, advertising continues to make up the lion's share of Meta's revenue, accounting for over 97% of total earnings. Instagram Reels, Meta's short-form video product, has grown substantially and now plays a key role in user engagement and ad revenue. The company's investments in artificial intelligence have also paid off, with new AI-powered recommendation engines significantly enhancing personalization and ad targeting. While Reality Labs, the division focused on virtual and augmented reality, reported an operating loss of roughly $3.8 billion. Meta's long-term commitment to this sector remains steadfast. Meta's financial position is remarkably strong. As of the latest quarter, the company holds more than $60 billion in cash and equivalents with no long-term debt on its balance sheet. In the first quarter alone, Meta generated free cash flow of approximately $11.8 billion. This gives the company tremendous flexibility to continue reinvesting in innovation, while simultaneously returning capital to shareholders through substantial stock buybacks. From a technical standpoint, Meta's stock is trading around $478 per share as of early June 2025. The stock has risen about 40% since the beginning of the year, significantly outperforming broader indices like the Nasdaq and the S&P 500. Meta's share price recently broke above the key resistance level of $450, which has now become a new support level. The 200-day moving average indicates a strong upward trend, while the relative strength index sits near 58, suggesting the stock is not overbought and still has room to grow. Strategically, Meta is focused on three major growth pillars. First, artificial intelligence is at the core of Meta's technology stack. Its open-source large language models, known as Llama, are already being integrated into the company's products. The new Meta AI assistant has been deployed across WhatsApp, Instagram, and Messenger, representing a serious challenge to existing AI leaders such as OpenAI's ChatGPT and Google's Gemini. Second, Meta is investing heavily in the future of computing through its Metaverse strategy. While Reality Labs is currently a loss-making division, Meta is laying the groundwork for a spatial computing ecosystem that includes virtual reality headsets like Quest 4 and augmented reality products such as the Ray-Ban Meta smart glasses. Third, Meta is now beginning to monetize its messaging platforms. WhatsApp and Messenger are being leveraged for business messaging, customer support automation, and integrated payments, particularly in emerging markets where advertising revenue is less efficient. Meta's strengths are numerous. It commands a massive global user base with over 3 billion monthly active users across its apps. Its AI capabilities and proprietary data give it a competitive edge in advertising and product development. With high operating margins and strong free cash flow, Meta is financially robust and has significant capital available to pursue ambitious projects. However, the company does have weaknesses. Its heavy reliance on advertising means that economic downturns or shifts in ad spending could impact revenue. Reality Labs continues to report large losses with no immediate path to profitability, and privacy regulations across jurisdictions like the European Union could constrain data usage and monetization. On the opportunity front, Meta has significant headroom to grow. Reels and business messaging offer new channels for monetization, while consumer AI applications can drive engagement and new revenue streams. There is also the long-term potential of digital commerce and metaverse platforms becoming major contributors to Meta's financials. Nonetheless, several threats remain. Increased regulatory scrutiny, especially around data privacy and platform influence, could lead to fines or forced changes in operations. Competition from platforms such as TikTok, Apple, and Google remains fierce. The company also faces execution risks in turning Reality Labs into a profitable endeavor. While these risks cannot be ignored, they are largely mitigated by Meta's financial position and market dominance. Regulatory challenges have existed throughout Meta's history, yet the company has consistently adapted and grown. Meta's artificial intelligence strategy, particularly its open source model and assistant integration, may help it leapfrog rivals by building an ecosystem of AI-enhanced apps and user experiences. The company's cash war chest, lack of debt, and profitability provide a significant buffer against economic and technological uncertainties. From a valuation perspective, Meta's stock trades at a forward price-to-earnings ratio of approximately 21.8. Its price-to-earnings growth ratio is roughly 1, indicating a fair valuation relative to expected earnings growth. The price-to-free cash flow ratio sits near 24, which is reasonable given the high margins and growth rate. Return on equity exceeds 30%, highlighting Meta's efficient use of capital. When compared to peers like Alphabet, Microsoft, and Amazon, Meta appears attractively valued considering its growth profile, innovation trajectory, and balance sheet strength. In conclusion, Meta Platforms Incorporated is no longer just a social media company. It is evolving into a diversified technology conglomerate with deep stakes in artificial intelligence, virtual and augmented reality, digital payments, and global communication infrastructure. The company has demonstrated it can generate consistent cash flows while simultaneously investing in the future. Although short-term risks remain, particularly around regulation and Reality Labs losses, the long-term upside is compelling. Based on its strong fundamentals, accelerating earnings, solid technical setup, and multiple growth catalysts, Meta represents an attractive investment opportunity at current levels. The combination of sustainable cash flows, innovative AI products, and global platform scale supports a favorable long-term outlook. Therefore, Meta receives a strong buy recommendation for investors seeking exposure to a high-growth, future-forward technology company.